But what about retirement resolutions?
Right.
Right? What about these kinds of things? So something that we get asked a lot when people are 5 years out from retirement, 4 years out from retirement, am I on track? Am I ready?
Okay. All right.
So what would you say to that?
Well, I mean, that's a loaded question.
Right.
Because on track for what?
That's it.
Yeah.
Enough.
On track for what?
Welcome to the Semmax Way, the definitive podcast for mastering finance, investment, and retirement planning. Prepare to unlock the secrets to financial success as we delve into lucrative investment strategies and provide expert guidance towards a secure retirement.
Hello and welcome, everybody. We are now halfway through the year, and I think this is a good time to sit down and talk about some stuff. My name is Matt Landon. I'm joined by Mr. Larry VanLandingham. We are two of the advisors at Semmax Financial Group. You're a CFP.
Yes, sir.
So am I, and I am excited about this conversation.
Yeah,
because now that we're halfway through the year, I think this is a good time to start talking about plans. We have these beginning of the year, January, everybody has these New Year's resolutions, but what about retirement resolutions?
Right.
Right? What about these kinds of things? So something that we get asked a lot when people are 5 years out from retirement, 4 years out from retirement, am I on track? Am I ready?
Okay. All right.
So what would you say to that?
Well, I mean, that's a loaded question.
Right.
Because on track for what?
That's it.
Yeah.
Enough.
On track for what? Do you have enough money to last through retirement? Can you get to retirement? Sure. Walk in and tell your boss you're ready to be done. You made it to retirement. That's awesome. Let's get you through retirement. So on track for what? On track for where's your next dollar coming from? How do you know that? What account am I going to pull from? What kind of philanthropic things do I want to do? What kind of legacy do I want to leave? So on track is very encompassing. It just depends on what you're talking about.
Right, because some folks will say, I want to leave a major legacy to kids. Other folks will say, I want to spend everything myself. And so am I on track to spend it all without running out before I pass away? And you're like, okay, tell me when you're going to pass away.
Exactly. I have clients on both sides of the spectrum. They want to leave everything to their kids that they possibly can or to charity, and they want to do it in the most tax advantaged way possible. Then I have other people on the other side that, they want to write their last check to the undertaker and they hope it bounces for that matter. They want to spend every penny. And so, and there's neither right or wrong, it's just whatever your individual situation is. But depending upon which way you go will determine how on track you are.
So let me ask you this. And the reason I bring this up is because there is a mindset shift that I would say has to take place, and it can be really hard. Because you go from your working years, you're saving, you're accumulating, you're putting money aside, and now all of a sudden I'm supposed to not save and take money out all the time. Just talk to me about how that process kind of goes through.
Well, it is a mind shift. You have to shift your mindset here because, like you said, for all these years, for 34 years, you've worked, you've saved, you've done the hard work.
Would you say this is underplanned? Like people don't think about this part?
I do. I think that's exactly right. I think they don't look at the fact that I've got XYZ amount of money that I've accumulated, and now I need to figure out what I'm going to do with it.
Yeah.
And I mean, obviously, sometimes we have to prod, if you will, clients to spend money because it's hard to shift that mindset because for so many years, it's been save, prepare. Well, now you're out of the accumulation phase. Now you're into the distribution phase. And so the distribution phase is encompassing a lot as well because, again, the more that you pull, depending upon how your accounts are structured, the more you're going to pay in taxes, And so there needs to be some strategy, some planning involved that says, okay, I'm going to pull from this account and it's taxable, or I'm going to pull from this account and it's not. It just depends.
Well, I think another piece of it is you get this mindset of being a saver. Like it's an identity thing. Right. It's like this becomes my identity. What do? I save. It's like this is what I've always done. And so you're almost asking someone to change who they are in a sense from how they view themselves. And I think you have to be on track from that perspective. But there's another piece of retirement where a lot of us have our social networks and a lot of self-worth driven in what we do. I mean, how many times do you go to a dinner and the first question people ask each other is, oh, what's your name? What do you do?
What do you do?
Right?
Yeah.
Not who are you or how did you get into this, which I think are much more interesting questions.
Oh, yes. Right.
If that's a little aside. If you ever go to a dinner party, don't ask somebody, what do you do for a living? Ask them, how did you get into that line of work? It is going to be a more interesting answer.
100%.
But thinking through that, okay, this is what you've done. Talk to me about what you've noticed with clients. Like, what are the ones that do you find some people come through this transition more cleanly or more positively versus not? What have you found?
Well, again, it's a wide spectrum because you've got those that their whole identity has been in what they do.
Right.
And so when all of a sudden they're not doing that anymore, they struggle.
Yeah.
Okay, what am I going to do? And some people will go back and do some contract work for the company that they retired from or what have you in order just to fill the open void. So it's very important, I think, to have that plan ahead. What am I going to do? What is retirement going to look like? And so, again, you talk about a shift in your mindset because I've been tied up in whatever I've done for 40 years. Now, is it going to be, okay, I'm going to do some volunteer work. I'm going to travel and see the grandkids. What is it? And so if you don't have a plan, you kind of wander aimlessly and you struggle.
And I think it's interesting because people will find something to do. How many people have you talked to where they say, man, I don't know when I had time to work, you know, because the days are filled up.
Right.
But I think it's not that you won't find something to do, and it will find that piece. Mm-hmm. It's just a more smooth transition versus a more challenging time.
100%.
Right? So I think those are two parts of retirement that should absolutely be thought about and kind of considered as you're getting closer to it. But talk to me about an income plan itself. You know, it's like when you say, okay, someone's 5 years out, what kind of questions are you asking to figure out if they have an income?
Right.
Because I'm assuming you just said, do you have an income plan?
I mean, you know, when we're talking to potential clients, for example, we're asking them everything under the sun, you know, and when we do our presentations to those people, we are laying the groundwork that you need to have a plan. Mm-hmm. And a lot of people don't. I mean, let's be honest, either all their money's still in their employer plan or they're working with somebody who is strictly investing their money. It's not that there's a financial plan there.
Right.
And so when you talk about a financial plan, you're talking about, okay, what does retirement look like? Okay, where are my income streams coming from based on the accounts that I have? How can I do it the most tax advantaged way, you know, possible? Where's my first dollar going to come from? How much of my current work income am I going to need in retirement? You know, because a lot of times, you know, some people, there's a broad spectrum. Somebody might need 80% of their income because they're cutting some expenses when they're not at work.
Would you say anyone goes up?
Yeah, I mean, some people do. Some people obviously go up because when they retire, they have a goal of what they want to do. They want to travel and go overseas or whatever the case may be, or they want to be, you know, they want to give money to a foundation or create a foundation or what have you, be very charitable with their funds and assets. So, but the important thing is just to have a plan, to put that income plan in place, because it will tell you a few things. Number one, it will tell you how much you can actually take in income, how much you really need to take for that.
And that would be the distribution percentage.
Exactly. And typically you know, the goal has been for years 4% or less, so that you're never really touching your principal. It's continuing to grow.
Meaning every $100,000, you can take $4,000 off of it and assume that it'll that $96,000 will create another $4,000 and you're back to you know, or continue to grow.
Right. It'll just continue to grow. So that's been the goal, if you will. But it also tells you how long the income stream is going to last, you know?
Yeah.
And how much is there for philanthropic or charitable or, you know, estate giving to legacy?
So something that I think is under planned for significantly is taxes.
Of course.
It's probably the biggest expense most of our retirees have. You know, so
I would
if you're thinking of a specific line item,
I would agree.
for when you're still working, it's probably your mortgage,
Yes, right.
But for retirees, I would argue
Yeah,
their
it's-
single largest line item is what's taking up the most expense. It's taxes.
Taxes.
And so planning for taxes, there's something that is really interesting with the sequence of distributions and the sequence of returns, right? And so I'm not holding you to a everyone do this, because obviously we're not giving advice here. This is just a conversation.
Correct.
But would you argue that folks do something wrong more often than not with where they pull from? Or are there any certain misconceptions you would say you would want to address on that sequence of distributions?
Yeah, I think that, and I hate to, I never want to tell somebody they're doing something wrong. I always want to say,
There's
you've
good,
got
better,
some,
best.
and you've got some opportunity here.
There's some optimization.
Yeah. But that being said, there is a, probably for lack of a better word, a correct way to do it. Okay. And, you know, it depends on the buckets of money that you have, obviously. So if you have the 3 types of taxable accounts in your portfolio, you know, some for capital gains, some for pre-tax, which obviously your 401ks and all that kind of stuff, and then some Roth money where you're never paying any more taxes on it, then obviously you've got some opportunity, you've got some choices, you know,
Right.
you've got some flexibility there. Typically, in my opinion, you know, you want to pull mostly from those IRA accounts first, primarily because what do you think taxes are going to do over your lifetime? They're going to go up, right?
Right.
They have to, because we have a deficit problem. Okay,
We have debt.
and we have a spending problem, and so you know
Yes.
we don't bring in enough revenue for what we spend out
We're talking
as a nation. As a nation,
I didn't know if you were
which
talking
is
about
why
you and your wife.
No,
or
no,
you
no,
and
no,
I,
no,
or,
no,
you
no,
know,
no, no.
We're talking about as a
nation,
spending problem.
we have a spending problem.
Agreed.
And in order to address that, you know, 2 things need to happen. Taxes have to go up, spending has to go down. That's
Pretty straightforward.
That's pretty straightforward, exactly.
Yep.
And so in your lifetime, taxes are going to go up.
Yeah.
So why not take advantage of the lower tax rates you're dealing with now and pull from those taxable accounts, whether it's for income or for things like a Roth conversion, where you're creating that longer tax-free, if you will, bucket of money to pull from in the future.
I think the other piece to that is also RMDs. Otherwise, you're building up a larger
Exactly.
RMD
It's
down the
gonna
road.
lower
And
that.
there's ripple effects with everything from Medicare premiums
Oh,
down the road
yes.
to how I think about the surviving spouse a lot.
Right.
Yeah, and I think that's a piece when people talk about beneficiaries, we tend to jump to the kids. Agreed? It's like you're sitting there talking to a couple and you say, well, you know, your beneficiaries. Well,
Yep.
who's your primary beneficiary?
Your spouse.
Right. And so a couple key things happen. We lose a Social Security. We go from married filing joint to
Oh my
single.
goodness. Right. The government kicks you in the teeth.
The RMDs don't quit. Those Medicare brackets shift down.
Yep. Because you can make less.
So I think there's ripple effects there that go beyond, but this isn't to say everyone should take everything from an IRA immediately.
No,
that's not
no,
the takeaway.
right.
But I think that's also where there's a coordination problem that comes into play a lot. Right. So have you noticed where there's an issue with your financial advisor, your CPA, your tax preparer, and then also your estate attorney?
Right.
How often are they talking to each other?
More times than not, they're not.
Right.
You know, they're not talking to one another. And that's where, you know, dealing with a certified financial planner, we can do things like tax planning. We can do things like estate planning. We can do things obviously like retirement planning. We're not going to give you tax advice, you know, and we're not going to, you know, give you something that you should get from a CPA.
There's a key difference between tax preparation and tax planning.
Right.
Tax preparation is I filled out all the documents and I put it in my return. Tax planning is looking at it and understanding if we invest that non-qualified money this way, it will trigger a larger tax consequence than if we invested that way.
Correct.
And tying that in with distributions and RMDs and Roth conversion
and QCBs
and donor advised funds.
Exactly. All those things.
And a little bit of knowledge being dangerous and a lot of knowledge being beneficial. And so somebody goes, oh yeah, capital gains, we can use donor advised funds, and then they put all short-term capital gains, and then they get smacked in the teeth anyway, and you go, well, that didn't do what I meant it to. And so there's a lot of those kinds of things that I think are really key to think through. But when you sit down with somebody, what would you say the most rewarding part is?
The most rewarding part is after you sit down with somebody, you've uncovered everything, and you're able to show them a clear plan forward, and their eyes light up, and they're like, man, I never saw that before. This is great. This gives me hope. Because most of the potential clients that we have, and even some of our current clients, they sit down and they feel like they have no hope because they don't understand, and it's not that they don't know, if you will. It's just they need some guidance, and that's what we're here for. And when you can give that to somebody and you can see the light come on in their eyes and then go, you know what, for the first time ever, I know it's going to be okay. Because it's just like, we're dealing with a lot of market uncertainty right now. I mean, that goes without saying. But when a client calls in and they say, I just need you to talk me off the ledge, and you're able to do that, and you're not telling them, this is not as bad as it seems. Here's where you are currently. You're ahead of the game. You're ahead of where we thought you would be at this point in time. And they go, every time I call you, I feel better when I get off the phone. And it's like, man, that's just awesome.
And that brings up something really interesting, because I think it helps to look at things on a regular basis, but to understand what you're looking at.
Right.
Because if your goal is to just be at a specific number, well, that can be helpful, but it's like, well, why do we need that number? Or does it need to be a little higher? Does it need to be lower? Are we still on track for things?
Right.
Because I had someone who came in one time and they looked at me and they said, okay, I know the market's down. How bad is it? And I looked at him and I said, you haven't been looking at your account, have you? They went, no. And they were like, I know it's going to be bad. And I was like, well, you're actually in the green.
Right. Yeah.
At the time, the S&P was down about 10%. They were up about 2%. And they went, what? And I was like, yep, pull it up, log into your account. Let's look at it together.
Yeah.
And I think part of having a plan is understanding that market risk, understanding that volatility, seeing those different things kind of come together and how it all works. But at the end of the day, if somebody said, okay, I'm halfway through the year, I'm either a couple of years out from retirement, or heck, I'm now in retirement and I don't think I have a plan. I'm taking distributions. It's like, because people, you'll ask them for a plan, and they'll hand you statements.
Yes.
And I go, that's not a plan.
No.
Right?
Right.
If I ask you to be my navigator and you hand me a map, I go, that's not that's not a navigation. It's like we gotta, yes, that's a tool.
Right.
We can use it, but that's just one piece of the puzzle.
Right.
Right. And so if you have someone who's listening to this and going, okay, where the heck do I even start? Right?
Yeah.
Because you mentioned taxes, you mentioned you need a certain distribution rate, but it depends.
Right.
You mentioned different account types. It's like, where do I even pull this together? What would you say the place to begin is?
I think the first place to begin would be, realize, first of all, come to the realization that either you need help or you need a plan. Okay, because everybody needs a plan regardless.
Right.
Okay, that's non-negotiable.
So you either need someone to help you create a plan, or you need to come up with one.
Or you need to come up with one on your own.
But you would say
everyone needs a plan. Yeah. Everybody, because without a plan, you're wandering aimlessly, and you're hoping for the best. But with a plan, you have a clear direction, and that's what it's all about, having a clear direction. So first, come to the realization of that. Secondly, get everything together and get a second opinion from somebody.
Yeah.
Because you can't get a second opinion from the guy that gave you first.
Even if it's yourself.
Exactly. Get a second opinion.
Yeah.
And find out, we were started this whole conversation with, am I on track?
Yeah.
And find out, have a goal of what you want, and then express those goals to whoever you sit down with and share that stuff, and then get them to be able to help you get there.
Yeah.
So I think that's the starting point. The starting point is to realize you need a plan, and then find somebody to help you.
So there's something that's pretty commonly used in the industry, and a lot of people have no idea what it is, but it's a Monte Carlo simulation,
Exactly.
right?
Right. Yes.
Now, I love that you never get 100% with a Monte Carlo simulation, because there will literally be a version where a nuclear bomb goes off,
Yep.
or Godzilla attacks,
Right,
or
exactly.
there will be an asteroid,
Exactly.
or aliens, or so the idea behind a Monte Carlo simulation is that it runs all the different permutations, right? So that's great. But how would you say someone should stress test their plan, or look at it? Like, is it as simple as just run a Monte Carlo simulation, call it a day, or what else would you maybe put into place when you're trying to stress test a plan to say this is a good plan, or
Well, I think
we're missing something?
right. Well, Monte Carlo simulations are great.
They're a tool.
They're a tool.
Yeah.
They're going to tell you have a XYZ percentage of reaching your goal based on what you're doing, and that's fine. I think that a better way to do it is to take some historical events that we have experienced and say, based on the way you're currently doing things, this is how your portfolio would perform if we had a repeat.
So if we go through 2008 again, how are you going to hold up?
How are you going to hold up?
We go through the dot-com bubble, financial crisis,
COVID,
COVID.
all of those things. Yep.
Or, hey, we have this massive economic boom. It goes way better than I thought it would.
Right, exactly.
Right.
Bull market, all over again, and that
But
kind of thing.
Stress testing, you're leaning more towards the negative than the positive.
Right,
Because if it does well in a
Yeah.
bad time,
right.
we'll do great in a good time. That would be the
Right.
theory.
Because the reality of it is, more times than not, when people get started, they're looking at, the red side of the ledger,
Yeah.
How much am I going to lose with what I'm doing, Not how much am I going to gain, because, gaining is great, obviously, but most people are more afraid about losing.
Yeah.
And so stress testing it to see, here is what we would happen in this one scenario, and how it would react, and then planning accordingly.
Yeah.
Yeah.
Now, I find that when you're able to grab onto that, that tends to be when people have the most peace. The most folks that tend to have more anxiety, and we're seeing that more, not specific to even just the stock market, but just the world at large. You see constant negative headlines, you see constant negative things, because that's what leads. What's that old saying? If it bleeds, it leads, something along those lines.
Exactly.
And whether it's your wallet bleeding, or whether it's someone bleeding, or whether it's just terrible, here's inflation reports, what do you say to the person that comes in? And do you notice any differences between somebody who walks in anxious versus somebody who walks in more confident? And I don't just mean, obviously, their confidence.
Right.
But what are the common trends that you find there?
I mean, when somebody comes in and they're anxious, they, more times than not, they're watching it every day.
Yeah.
They're watching the ups and the downs. As we sit here today, we've had 2 or 3 days in a row that it just has not been pretty.
Yeah.
Overall, the market is still in a good place, since January total. But those 3 days, people are concerned.
Would you agree that it helps when you know where you're at?
100%.
Because I think about it like, I've used this example before, and you've heard me share it, but if you're driving down the interstate, you look over, you see a state trooper on the side.
Right.
The trees are going by, but your speedometer says 0.
Yeah.
How comfortable do you feel?
Not really.
It's like, it's the same thing. Your market, things are going by, things are up and down, but you don't know from a comfort standpoint where you're invested or how you're invested and what that really means, right?
Right.
It's very difficult to feel at peace.
Yes, it is. I think you need to know, obviously, what you're invested in, why you're invested in it. Also, I think you also need to be able to look at your account, compare it to where your plan has you at, and that will give you that peace. You know what? We planned for this.
Right.
Inadvertently, obviously, we didn't know that this specific thing was coming, but at the same time, we drew out the plan for some, worst case scenarios, if you will.
Yeah.
Because we did stress test it.
So parting thoughts. If you were talking to somebody and you're saying, all right, you're 5 years out right now, is there anything that you would tell them to ignore?
Ignore?
Because there's so much news out there. And here's the reason I say that.
Okay.
There's so many headlines. There's so much stuff. Is there anything where you would say, listen, let's just take a breath, focus on what we need to do, and put that to the side?
Right.
And I'll give you one for me that I think it has been coming up a fair bit. Is Social Security going to run out? Am I going to have it?
We
Right?
just,
It's like,
just came out the other day. Yeah.
okay, is there anything you can do about that? Yes or no? No. So how about we do this? Let's put together two plans, one with, one without. If the one without still works, the one with, we're golden.
Right.
Right? But beyond that, let's put that worry down because you can't keep focusing on it because you can't do anything in control.
Right.
Is there anything like that you notice?
Yeah, I think it's again, we're talking about all encompassing when it comes to stuff like that. You have to be able to tune out the noise of basically of most of it, because the reality of it is I don't care which side of the aisle you lean on, we don't get just
Unvarnished truth?
or just the news.
Yeah.
Just the news, and we get to make our own decision. It doesn't matter what side you're on. It gets spun from that side.
It's not, this is what happened. It's, this is what happened and how you should feel about it.
Exactly. Exactly. And so I think you should tune that out and look to, somebody that has an unbiased, opinion about what's going on. And frankly, that's going to be your financial planner when it comes to your assets and the markets and things like that. We specifically are going to tell you exactly where things are.
Yeah.
We're going to tell you, where you're at in respect to that, and that, we need to make some changes or we don't.
Because another one that I thought about, and as you were saying, it made me think of this is taxes. Because a couple of years ago, someone was saying, okay, so if Trump gets reelected, if we have another Trump administration, we're going to make these tax cuts permanent, right? And it was like, well, permanent until they change the law again. Right? And so that's the kind of thing where you say, okay, we can't stress about what's going on out of Washington. I think it's important to be aware of where the winds are blowing.
Of course.
It's important to be aware of what's either just come through or what's about to come up. But at the end of the day, we can't sit here and stress over that because we can't control that. Yeah, but what we can control is making wise financial decisions, making a diversified portfolio work for you instead of the other way around.
Right.
Doing the tax planning, putting together a comprehensive plan, reviewing it regularly, right? And making those updates and modifications along the way. Well, are there any parting thoughts that you have on this that you would hope if nothing else, people take away one thing or
get a plan.
Get a plan.
Get a plan.
That's it.
Get a plan. Put a
right.
plan in place.
And if you have any questions on how to make a plan, and you want more details, or if you want Larry to put one together for you, we'd be glad to do that. At the same time, I say this, and I know some of our listeners are clients, some of our listeners are not. I would say either way. Something that I think is really, really powerful is when you know something, share something. It's wonderful if you've got this great piece of knowledge, but if it's held tight, it doesn't do anybody else any good, right? And so whether it's talking with someone about what you've learned or bringing things up, I think it's great to share and have dialogue and conversation. I know that's something we do a lot. And it's always valuable because one advisor will bring something up and you go, I didn't know that.
Right.
And then somebody else will bring something else up and you go, I didn't know that either.
Right.
And I think it's important to be a student of the game.
100%.
Always learning something new. And so I always enjoy when we get to sit down, whether it's in this kind of format or just in your office,
together.
because I always learn something new. And I appreciate you taking time out of your day to do this.
Of course.
Because I know you got plans to go work on.
Yeah, exactly.
All right.
100%.
Well, on behalf of Larry, myself, and the entire team here at Semmax, we just thank you so much for watching, for listening. If you're interested, you're more than welcome to reach out. There's all kinds of ways to do that, but we hope you have a beautiful day. And as always, if you don't control your finances, they will control you. And I know which way I like it to be better. So live a stress-free life and have a beautiful day.
Thanks for joining us for another episode of the Semmax Way. If you're not completely satisfied with your current financial advisor, give us a call for a second opinion. Please note that this podcast is intended for informational and entertainment purposes only. The content shared on the Semmax Way should not be considered as investment advice. It is always recommended consult your licensed investment representative and a competent tax advisor respectively for your fiduciary needs and plans. No statement contained in the Semmax Way podcast or made by its producers, sponsors, host Matt Landon, or Semmax Financial Group is a recommendation. Semmax Financial Group and Matt Landon are not responsible or liable for investment value loss of any kind from any action taken based on information discussed in the Semmax Way podcast. Any opinions or viewpoints in this podcast are shared for information and entertainment purposes only and are not financial advice. We do encourage you to conduct further research and seek personalized advice for your specific financial circumstances. Full disclosure available at semmax.com/podcast. Thank you for joining us, and we look forward to having you tune in for future episodes of the Semmax Way.